So, okay, we're now going to have, for arguably, one of the most important conversations. It will be a fireside chat. Now, making anything work has to have funding, has to have money. Now, whether it's from government or whether it's from venture capitalists or whether it's from whoever, nothing happens unless money's involved. So ultimately, that's a good topic of conversation. So we're going to have a fireside chat named The Business of EVs, Navigating Investment, Funding, and importantly, Profitability. So would you please welcome to the stage with me Avi Feldman, Managing Partner of Mobilion Ventures, and Sal Jafar, CEO, ESG MENA, who will be the moderator. So round of applause, please. Thank you. Good to see you. Good to see you. You've got the microphones on your chairs. Yeah, thanks.
Thank you very much. I would really like to start with just a point. When I established ESG MENA 2.5 years ago, I approached you and I said that I'm going to launch ESG MENA in the Middle East. And you were in the UK, and here we are after 2.5 years together in Abu Dhabi.
You made it.
Finally.
Thank you very much, Avi. It's very good to have you here in Abu Dhabi. You know, we are in a very community that's buzzing of VCs, with the startups, with the financing, with the incubators, and all that. Very few of them make it as in terms of success. In EVs here in the UAE, we're very active. We would really like it's a hub for knowledge sharing, for developing knowledge and all that. I mean, we are seeing lots of new startups here, as we see at EVs. How can we make it more successful for VCs and for startups and for the whole business model, basically, in terms of mobility and finance? How can we make it lucrative for you as VCs to finance startups in mobility and small projects?
So first of all, I'll start with a very short introduction about Mobilion, just to frame it. We are a mobility VC that based in Europe and Middle East. In terms of the geographies that we invest, we are pretty much corporate side. Which is quite unique within the whole VC area of, you know, where we focus on who we partner with. So we are on the corporate side and not so much on the pure financial play. And we have a very, I would say, interesting, you know, stating about ourselves that in terms of bringing the technologies into market, we focus on the aftermarket, or what we call the aftermarket. So not less the OEM side and more the, we look at it as a more quicker and more shorter way to commercialize technology.
Where the success rate is higher?
I think that the success rate is higher because in comparison to the OEM side, the manufacturing side, when you look at the aftermarket, and the aftermarket is a very wide, it's the service providers, it's aftermarket parts and services, it's even insurance company, and of course the fleet. Basically, they are operations. So if you bring a solution that you're able to show that in a very short time, let's say up to 3 years, you're able to give a very good ROI, and that's, you know, the terms that you are looking for, then the operational side will buy it. So it's less of a question
Yeah.
of very long-term.
Yeah. What is your strategy? How are you helping? We have lots of them here in the UAE because don't forget, before the OEMs, they were being, I mean, from the gray market or many EVs being imported from China and all that, and those vehicles wanted service in Dubai and or in the UAE at large. How are you helping, for example, those companies, and how is it as a business model for you?
Okay, so I'll start with, sustainability at large.
Yes.
And EV are a major part. At least for us, we are 50% of our investments are in that area. We look at it as a very important side. But when you're talking about sustainability, there is, as you know, a hype that is based on a lot of it on greenwash.
Yes.
So companies and organizations and also the financiers are looking to greenwash themselves through investing in different solutions. For me, for a startup to be sustainable or within the right criteria of sustainability, that's fine. That's a plus, that's a criteria, but it's not the only criteria and it's not the most important one. The most important one would be the validation. Validation from the market. So
How are you doing that?
So when I'm looking at companies at very early stage, and I'll give you a few examples to highlight what we do. From very early stage, we are looking for that validation. So when we are doing the investment, it's not that we are, putting all the money in day one and tell the company, okay, now let's meet in 3 years and please show me the progress. No, it's pretty much hands-on, and we give it in tranches, so you're able to meet milestones of validation. I'll give you 3 quick examples. One company that we invested in called Algolion, and they developed a technology to monitor state of health of EV batteries. Okay, because EV batteries are very sensitive and they can explode, and in few cases,
Especially in here in this region,
and
very hot.
in extreme weather condition, both cold and hot, that trigger that situation. Now, today, what you have is only solutions that detect minutes before the explosion. So it's no good. You're able to flit from the vehicle, but you're not able to maintain the vehicle and to repair it. This company developed a solution, software solution, and they were trying to sell it, as I told you, to companies, but without a clear vision. We came in, we told them, okay, we are going to give you the first layer of finance, but let's go together to build the right strategy. And within 18 months, we sold that company to General Motors. Today, it's a business unit within General Motors, doing a software solution in the cloud to analyze and monitor EV batteries, and to reduce, for GM, it reduces the need to recall
The risk.
Yeah. I'll give you another example. We have a company that does, there was a question by the moderator before with regard to wireless solution.
Yes.
So we developed, in my fund, in this fund, we have one solution, and in my previous fund, we had another solution for wireless.
Charging.
It's not, basically it's not charging, it's power in motion, because the charging part is just the backup. Okay, because it's a direct flow of energy to the engine. So this company called Kapau, they're doing electrification for close-gated operational sites, such as manufacturing and warehouses. I heard the question from Amazon before. So robotics in warehouses and small vehicles and so on. By the way, it's not. And when you're looking at the entire EV solution, it's not that one solution takes it all, only batteries,
Yes.
only that. it's a combination, and you have to know how to combine the different combination based on the operation you're running. But to the point of this company, we told them, you have a year to prove that the market needs you. Okay, so they went to Denso, North America. And in 1 month, they got the first POC for 5 systems. The second quarter, they had the entire operation in that site managed by this kind of system. And within a year, we have a purchase order for the entire operation in North America. So you have it validation by Denso, investment by Toyota Ventures. That's the validations that we are looking for.
Yeah. And what about at the grassroots level? So you are talking about that they are taking it to the mature markets of the United States. What about, investments in this part of the world?
So I think that, looking at this part of the world, you better understand the assets that you have and what are you trying to establish. So for me, if I look at the current market, it's a very good market because it's a rather small one. Okay, so you're able to deploy and to play here with different technologies and different solutions and to showcase that there is validation as we spoke about it. But in order to do so, you need to create a combination that will allow early stage startups to feel safe that they are playing in a market that will give them the entire play. It needs to have the right regulation and the flexibility. Okay, regulation needs to have flexibility within it.
We are in the UAE, with such a visionary leadership that we are blessed with, that are very flexible in terms. How do you think that the sector needs to adopt to those, and including the government, basically? What are your top 3 points of pieces of advice?
So I would start from the first, buy the best practices that are outside. Okay, so go out there, research and bring in.
And the UAE is the best at that. How do you know that? In aviation,
So giving the advice that can be adopted very, very fast.
Okay.
Second is be flexible with the companies. So hear the companies and hear what they can offer and what are the limitations, and give them the ability to play with it in a very limited and controlled sandbox. And then cooperate. Okay, cooperate. Once you're able to showcase, let's say here, that it works, now it transmits to the other side. Yeah. It shifts. And now the UAE can be an exporter of the regulation, of the policies, and of the adoption. So you have, I would say, 2 different targets. You started from an internal target, but then you can play with it as a promoter of exporting.
And perhaps this is what the main motive of this event, the EVIS.
Right.
It was a great platform for knowledge sharing. We're talking a lot about AI and the role of autonomous driving. This is the future, like Elon Musk said, and we know that China is pushing hard. AI is very strong, lots of buzz and lots of very solid projects, global and regional and local. We saw the investments in the United States, in France, in Italy, of the UAE, and also the local projects. What's your advice? How can we progress in terms of investment in AI, mobility, and including autonomous here in the UAE? How can we make it interesting and basically lucrative for VCs and for the players?
I think that we need a little bit to zoom out, because AI or AV and EV are technologies that we silo them. and let's have a bigger prospect on that. Up until 10 or 15 years ago, all of the development of new technologies were inside the OEMs.
Yes.
Internal. And,
This is
and
very,
most of,
now it's diversifying.
yeah, and most of it was mechanical. Now it's diversified because the technology and the opportunities are coming from everywhere.
Yes.
From technology companies like Google and you know these kind of technology providers. They are coming from startups, developing different and innovative solutions. And now you need to marry them together, EV, AV, AI together. But there is also another development that is going in parallel, and maybe it's even more important. And this is a change in the business model of going to mobility as a service, okay? So you have a revolution on the technology side, and you have a revolution on the business side. Together, it's a perfect storm.
Yeah.
Okay. Now, when you do that merge, and you take those technologies, one should look at where is the easiest way to deploy, and then to scale up. I'll give you an example. We have a portfolio company that does AV, EV solution for close-gated operation. For example, resorts, airports, campuses, everything that is close-gated, and of course in those places it's usually low-speed controlled vehicles. Now, starting at that, you're able to deploy AV that we know in the last few years was enormous hype, and then a fall down for a few years because there was no deployment. But if I take an environment where I can do deployment at large scale, everywhere, I can now have this level of activity fully deployed, and then to move on upwards and scale up the technology. So have in mind this tension between the technology development and the business model, and how you create a business that can scale up in the right pace for the startup. Yeah. Okay. Okay.
Yeah. We are seeing here not only EVs, we are seeing commercial trucks, we are seeing buses and all that. The investment model for VCs and for everyone, for financing, needs to be different than regular EVs. What is special about this market? How can we make it more lucrative? And how can we develop it further? The EV sector has been for some time, but not the case with trucks and with buses. How can we push in terms of financing?
So we need to better understand what's the difference. Okay, why I would say heavy duty vehicles are, other than the sheer power need, what is different? And when I look at it, I think that what's coming out, the most highlighted way is the utilization. Okay, utilization rate of heavy-duty vehicles is the major attribution and asset. And if you understand that, then you're looking for solutions that, if you give them that utilization, you're able to bring different solutions. For example, I was talking about wireless inductive or conductive technologies. If you run in a closed loop, for example, vehicles within the city that does cleaning and waste management,
Gated communities,
gated communities,
airports.
Airports, shuttles, even city buses.
Yes.
All those can run on wireless if it's one-time investment in the infrastructure side, and then you're good for 20, 30 years on the same infrastructure, and you can upload additional vehicles on the same infrastructure. So if you take that into account, I think that you're creating a solution that is dedicated or having in mind the heavy-duty vehicles. Another example is you have a real estate that is unused.
Yeah.
The roof of the buses and the trucks is unused.
Yeah.
Use it for solar PV that will reduce the energy needed in order to cool the vehicles. So those just two small examples of how you differentiate and bring solutions that are dedicated to
in terms of here, we're seeing lots of VCs basically in terms of technology, less so in terms of EVs and all that. We are seeing, what is your strategy for the UAE in particular, let's say, or for the GCC to enter the market, to make more business, in terms of what's your plan for partnerships, for example?
So I think you said the answer within the question. The answer is partnerships. I'm a great believer in collaboration and partnership.
What's your strategy in this?
So bringing the right partners to collaborate together. It means that if you bring, if you're from the financial side, or if you're from the operational side, you buy and sell vehicles, you sell services, you sell parts. If you combine those together with the technology side, you're able to create a whole which is greater than the relevant parts. And this is exactly the kind of partnerships that we are looking to create within our ecosystem. And when I'm coming here to the UAE to participate, but also to look for potential partners, I look for those that have an interest within electrification and sustainable mobility, but can also contribute through being channels to market if I bring the right technology to...
What size? Mid-size, small size?
I don't care about the size, I care about the motivation. So if you have the right motivation, you could be small today, but bigger if you bring the right technologies later.
Any contribution or partnership with other financial providers locally?
For sure. Those financial providers can start small with the fund and then become direct investors in later on stages when the company needs additional funding.
Mr. Avi, thank you very much for being with us today.
Thank you very much.
Thank you, everybody. Thank you very much. We've got time for one question. Now, if there isn't somebody in the room that says, hello, would you mind investing in my company? I'll be disappointed, but never. Okay, all right. We've got one over there. Because you've had a couple.
There is a startup named Make My Day, so
okay,
watch for it.
Right. Your question, sir.
Hey, Avi. Thanks for your insights. My question is regarding DC charging and grid capacity. As we move towards electrification, grid capacity is one of the main things that we're going to have a major challenge in. But you still see a lot of public and private sectors investing heavily in fast DC charging, 120 kilowatts and extra, when in reality, 120 kilowatt chargers and higher don't consistently charge at 120 kilowatts. They only maybe charge it maybe for 15 or 20 minutes at a time, and that's typically between 10 and 40%. So you're using up a lot of grid capacity, and you're wasting a lot of the capacity you could be using if you installed AC chargers or smaller DC chargers. So do you think it's wise to invest in companies or infrastructure for fast DC charging?
Yes, and the question is not a yes or no. The answer is not a yes or no. It's the right combination. Okay. So, and I think I said it before in terms of you need to deploy technologies and solutions that will give you the entire range. Now the question goes to whether or not the ultra-fast chargers or the fast chargers should be 5% of the entire deployment in the market or 50%. Okay, so you need to have the entire scale and the entire solution. By the way, not only chargers, you can think of other solutions to do that. But basically, it's a combination of the entire scale, and you need to analyze the local market needs, whether it's mostly urban or intercity, and based on that to decide. And I'm sure that the local here knows better than I do with regard to the needed combination.
Okay, great question. So, I'd definitely like to have a word with you at some point, not now.
But I would guess it's around wireless.
How did you guess? Yeah. Okay, so for now, can we please give our appreciation once more? Sal and Avi, thank you. Thank you very much, gentlemen.